We've got a chance now to take a look at how to trade Bitcoin, but not just Bitcoin, also the cryptocurrency space where things are moving. But Bitcoin, of course, takes up pretty much all the column inches when it's discussing some of these cryptocurrencies. Ron William joins us now from RW Advisory. Before we get into Bitcoin itself, particularly, where does this stand in terms of context? Because we hear so much about, is it a bubble, isn't it a bubble, where is it? But in terms of context for some of the other known bubbles, where does Bitcoin sit?
Well, there is a rhyme to history here, clearly. It is looking bubble-like and there is a mania at play, but there's an open question, ongoing question as to how and if there will be a repetition to the finalization of bubbles. Now, in order of magnitude, we're comparing babies to giants. Now, looking at Bitcoin, it's in the magnitude of about 100 million% price appreciation if you anchor it down to the less than 1 cent start point, which is actually where it started in the ashes of the financial crisis of 2009. Now, in comparison to the ones that we know, historically the famous ones, the tulip bubble, of course, 50,000% on the upside, and the South Sea bubble, which we here in Britain will know more, that was actually just a mere 1,000%. So very different in terms of price magnitude. But the central thesis here is actually the stage of the bubble is different. We're, in my opinion, according to the model that I use, in the first stage, transition part of that stage. And final point here is that this is very separate from the blockchain long-term disruption opportunity. These irrational price movements that we're seeing are Bitcoin-specific, crypto-specific, but actually different from the actual long-term disruption opportunity.
That's an interesting comment, actually, because put this into context of some of what we've had in terms of recent news. Jamie Dimon, of course, 3 or 4 months ago, talking about the fraud that Bitcoin was. He now says he wants to rein back on that, but he does acknowledge the fact that it's the blockchain technology, which, of course, is the special thing here.
Yes, absolutely. I mean, that's the platform that will likely create the revolution that we saw back in '99 with the dot-com revolution. This time is very similar to that time. But I think the mistake that people are making is overly correlating the price to the long-term disruption opportunity. There is a big new phenomena here at play.
Yeah. Okay, let's take a look at the second chart. Now, this is going to take some time to explain because clearly there is a lot going on here. Now, the title is Bitcoin Short-Term Risk under 10,000 before the next wave up. As we speak, we've seen a 12,000 print on Bitcoin today in terms of price action. Yes, it's gone up back over 13,000. But explain more about what's going on in this chart.
Well, despite how the upside on Bitcoin and other fast-moving markets, the laws of physics still apply, and any price acceleration is unsustainable in the short term. And so for that reason, we lost momentum in just ahead of that 20,000 glass ceiling, so we fell short of that. Then we had a correction to the magnitude of almost 50%. In the middle of that, that's when I actually went on the record on the 22nd of December, calling for further risk into 10,000. So some of that has played out. Here and now, we're looking like we're actually going to get there in a very short space of time. Certainly, according to the panel B, they're my own timing indicators suggesting that we're in that phase now, what I'm calling the new cycle learning phase, but also a few other volatility cycles that are kicking in place now and in the next few weeks. One interesting point here is that all of this is taking place not just after a price exhaustion point, but also just a week or so after the exchanges announced, the CME and CBOE, that they were going to actually include Bitcoin. So this obviously did shake the market a little bit in terms of the frothy speculative part of the market, potentially inexperienced traders with over-leveraged mandates, but also ultimately it is healthy for the market, and this is the point of hope I want to make for the long term. It does add more credence to the market and thereafter open the way for better transparency, smart money to follow through, ETFs and whatnot.
In terms of support at these sort of levels, we're currently trading around about the 14,000 level, but you've got a couple of levels of support below where we are.
Yes, well, the key level is actually below 10,000. 10,000 is only a psychological level, important, but not as important as a price gap or price exhaustion zone there, highlighted in the red parallel lines, and that's between 91, 92, 83, 25. Now, at any point in time when a market, including Bitcoin, gaps in price, that usually creates a magnet in the market to retrace back to that level. Not only will we likely retrace that level, but we have to watch that level as a make or break level, a line in the sand, because beyond that we could get a very quick move to 7 to 6,000.
Yeah, okay. Let's move on to chart number 3, which is titled Poor Risk Reward in the latest cycle. Explain about this, because obviously as the price goes up, it becomes more and more difficult for Bitcoin to continue to double, which is what we've seen so many times over 2017.
Yes, well, also from a mining perspective, it increases the demand and the pressure for mining the Bitcoins in general. But in terms of price and certainly risk and reward, it creates an even greater asymmetric risk. So although on the upside, people can make more money as the market continues to rise, especially as it has done in the last 2 years, 3,314% or thereabouts, that's been the parabolic, so just almost like a one-line, straight line move up. But I've called it the parabolic risk cycle. So while you can make a lot of money during that time, you can also do it at the expense of a lot of risk. And so the likelihood is for downside risk of potentially an average of about 85%. That is, if you just net off the last 3 corrections in Bitcoin, looking over its history, that is the average. And also what's interesting from an sentiment perspective, just a nice search on Google will show you that the word Bitcoin bubble has also served as a good interim top indicator, and that appeared in 2 successive peaks and the current one. And just as a final point here, just for the long-term bullish case on Bitcoin, keep in mind that prior to 2016, so 2009 to 2016, there was only an estimated 1% adoption of Bitcoin in the market in terms of transactions, business transactions and internet transactions. Now we're actually only 3%, so there's still a lot more to go.
Right, okay. In terms of context, you talk about a 3,314% rise in only 2 years in Bitcoin. How does this compare with some of the other cryptocurrencies?
Well, it was actually, despite having a phenomenal upside move on Bitcoin, it's actually one of the worst in 2017 compared to its peers. So it's in a race to the top, Bitcoin lost in 2017. And compared to its sister crypto Ethereum, that was 10,000% in 16 months, and Ripple, creating that miracle Ripple effect in 11 weeks, 3,500%. So although it's less in price terms, it's certainly more in terms of percentage gain per day. So there is a crypto rotation here, but it's an order of a miracle magnitude.
Yeah. In terms of Bitcoin and the relative performance, when looking at Bitcoin, as I said at the top, everybody talks about Bitcoin. When you're talking about cryptocurrencies, it occupies so much of space in the newspapers and in airtime. How does it compare to some of the other phenomenon that we've seen over the years? I'm thinking of some of the other companies that have been and gone. I mean, Bitcoin is the poster child, I think you call it, of the crypto space.
Yes, very much, and it's the first in, and certainly become the benchmark of crypto. All currencies are priced in it, so it has that kind of dollar reserve status of some sort. But going back into history, there is a lot that we can learn, particular to the '99 tech boom and crash. And during that time, we had the Facebook MySpace rotation, where basically one was never to be heard again from, and then Facebook took leadership. So that could be the case where we could have a fallen poster child event. Let's also keep in mind that Bitcoin is also losing a little bit on the competitive side versus its peers in terms of technology efficiency, in terms of speed, and in terms of cost of transactions. That might improve over time, but it is a race to the top. So it's a question of backing the cryptocurrency that will win all. The other key point here is if we look back to the tech boom and crash of 1999, going back to my original point about bubbles being staged processes, not an event, but a process. It's a 3-stage process according to my analysis. And stage 1 is the speculative mania stage, where we have the rise, the bubble and then the burst. Stage 2 is actually where we have more what is called a transformation phase. It's a learning phase in the market after the crash. Usually regulators come in, things become a bit more sensible in terms of in terms of the business use of that technology. And that's usually when there's a rotation between the likes of Facebook or MySpace or Bitcoin and another crypto in that case. And then finally, it leads us to the paradigm shift, and that's where we break above the bubble highs all over again, and the real stuff starts to go mainstream. Now, the 3 points I put there just for that long-term mainstream, which may kick in from 2019 onwards, is basically an exponential growth when we get further adoption of Bitcoin and crypto across the board. The tipping point or the sweet spot seems to be 20% according to prior creative destruction cycles that some people have documented. So it doesn't. So once we get through 20, it then goes in a very short space of time to mainstream adoption. Also, in terms of technology, Lightning Network is actually the one that's being developed right now in the next year or so, which will significantly improve transaction time, make it that much more cost effective, and that will really scale out crypto to a much larger extent over the exchanges and across the board. And lastly, a potential currency revolution in the mix. Who knows, but certainly something that we cannot imagine now to happen in the next year or two with this paradigm shift.
Just to go back to the point you mentioned about the 20% adoption of the paradigm shift, just to re-emphasize, you're saying there's only a 3% adoption at the moment by Bitcoin?
According to some estimates, yes. And
so we're still very short of any paradigm shift in what we are in terms of where we are in terms of the development.
Yes, I mean, despite the views out there that it's saturated, it is in terms of speculative froth, but not in terms of integration within the economy. And it's not just the financial markets, it's across other areas that can be revolutionized with this new cryptocurrency.
Yeah. Okay. Let's bring up your last chart. There's some humour on this in terms of some of the graphics on here, but I think there's a lesson to be learned from this. Explain what's happening here and where we are now in 2018.
Well, we're certainly in known unknown times, and what that means is, we haven't seen a 5% correction on the S&P 500 in 16 months. We've had the best start of the year. It all looks too good to be true. But if you look at this index set up by the St. Louis Fed, this actually measures the story behind the story, and that's financial stress. And what it shows is that we're probably the same, if not worse now, in terms of financial stress indicators compared with the housing bubble and the tech bubble. Now, what concerns me here is that there's a market fragility. This has been an ongoing theme that we've been writing about. And so it doesn't take much to break the camel's back, as it were. So any kind of risks to the downside in Bitcoin or any other asset class, the bond market, if we get a spike in there or the such, can lead to a systemic contagion of some sort. And so this is actually what is important here and now, while we're in the speculative part of Bitcoin, but also other bubbles which are frothing around, just to keep an eye on for the year ahead.
Yeah, just to go back to the chart very briefly, you've got 3 black swans there. They're depicting 3 events that we have already had.
It's 3 events that we may have trigger. I think first and foremost is yields rising and the tipping point that might bring with it. Second one is some kind of a stock market correction and an increased volatility of at least 10% or more. I'd say up to 20% for it to really hit people's pain thresholds. And I think the third one, which is becoming topical nowadays, is geopolitical risk. We don't have to go too far. North Korea, the Middle East, it's all just flaring off at the moment. And so something to be alert on. Stay long in the markets for those existing trends, but be ready to exit at short notice. Okay, all right, Ron, it's interesting. Thanks indeed for joining us with a look at not just the crypto space, or indeed Bitcoin and the crypto space, but also some of the other fragilities in the market as things stand, as we are, now, midpoint way through January.
Subscribe to IG for educational content, company insight, financial analysis and expert commentary.